Let me start with a story. One of my clients was interested in a single-family home that was listed at a lower than expected price. This home was on the market for almost 2 weeks, and they asked me to look at the disclosures to check what's wrong with the house. Are there any reasons for the low price? We did not find anything significant in the disclosures. Both the price and 2 weekends of open houses were just a marketing strategy. The home sold with 6 offers, significantly over the asking price, and the winning offer also was all cash. At the same time, we see a lot of condominiums and townhomes staying on the market for weeks, if not months, without any offers. The Bay Area housing market is no longer a one-size-fits-all. In fact, it's splitting in two. And if you are a buyer or a seller, understanding this divergence is the key to making a successful move. In this episode, I'm going to walk you through exactly what's happening, why it's happening, and what you need to do about it. So stick around until the end for the full picture and my tailored advice. First, let's talk about the most important number here in Santa Clara and San Mateo counties, the median sale price. In our area, the median sale price in August is holding steady at $1,600,000. On its own, that's a less than 1% increase year over year. A lot of people might see this and think the market is just flat. But that number is incredibly misleading. It's actually hiding the tale of two markets I mentioned earlier. When we break it down by property type, the story becomes crystal clear. Single-family home prices are up by 5% year over year to $1,888,000, while the median price for condos and townhomes is down by 8% to $995,000. This is a dramatic difference both in price level and the direction of the market movement. It is the most important piece of data to absorb. These two markets reflect the reality of two distinct demographic and economic groups playing in the Bay Area housing market right now. Next, let's look at how long homes are staying on the market. The median time on the market is 17 days, a significant jump from 12 days at the same time last year. This increase means buyers have a bit more time to think, to do their due diligence, and to not feel the intense pressure of a lightning-fast market. But again, the real story is in the breakdown. For single-family homes, the median time on the market increased from 11 days to 14 year over year, a 27% increase. That's a notable shift. But for condos and townhomes, the change is staggering. The median time on the market has soared from 16 days to 29 days, an increase of more than 80%. On average, it takes twice longer to sell a condo or a townhome than a single-family house. Sellers of condos and townhouses are feeling this slowdown acutely. Finally, let's look at our active inventory. At the end of August, we have 2,700 homes for sale, which is up 14% from last year. Unlike the other metrics, there isn't significant discrepancy between property types here. Inventory has risen across the board, which is a healthy sign of a more balanced market. The need to sell is driven by life cycle events that equally affect all homeowners. Things like family growth, a need for a specific school district, job changes, marriages, and divorces. While we're seeing more homes available, the demand for single-family homes is still outpacing the supply, while the condo and townhome segment is seeing a significant imbalance. So, why are we seeing this massive split? This brings us to the core reason behind the market's current situation: general economic uncertainty, and most importantly, high mortgage interest rates. The Federal Reserve has kept the prime rate unchanged since December, and while there is an expectation they will begin to drive rates down at their September meeting, that hasn't happened yet. And this is where the market truly splits. The buyers who are most affected by these high interest rates are first-time home buyers. They are overwhelmingly the ones in the market for entry-level homes, typically the condos and townhomes. These buyers often have less financial cushion and are more sensitive to the monthly payment amount, which is directly tied to the interest rate. They are also more insecure about their jobs, their income and savings, and their long-term ability to pay off a mortgage in the current uncertain economic climate. This insecurity, combined with a higher cost of borrowing, is causing them to pause. They are forced to put their lives on hold and simply wait on the sidelines. But there is another major factor suppressing the condo and townhome market right now: new regulations. Specifically, California State Bill 326, also known as the Balcony Bill. This law requires homeowner associations to conduct mandatory safety inspections of all exterior elevated elements, like balconies, decks, and staircases. The deadline for many of these inspections was at the beginning of this year, and for many associations, the process has uncovered significant repair needs. This creates a double burden for condo associations and, by extension, their homeowners. First, it can lead to a large unexpected special assessments to cover the cost of these repairs. This potential for a sudden massive fee makes both current owners and potential buyers very nervous. Second, these new regulations are currently affecting the ability of buyers to get loans. Lenders are becoming much more stringent and often unwilling to lend on units in non-compliant associations. If an HOA hasn't completed its inspections or hasn't addressed high-priority repairs, a lender may flag the property, forcing the buyers to either pay cash or walk away from the deal. This is a huge reason for the dramatic drop in demand for condos and townhomes. It's creating a very real roadblock for a significant portion of the buyer's pool. Now, let's address the interesting paradox at play. While the primary story is that high rates are slowing the market down, the secondary factor is that many consumers are waiting for the mortgage rates to drop before they re-enter the market. This creates a fascinating tension. The market is slowing because of high rates, but the very fact of people waiting for lower rates is also contributing to the slowdown. It's a self-fulfilling prophecy. This is not a dramatic crash and burn scenario. This is the market that is going through a necessary adjustment and realignment. It's a pause, not a collapse. The high-end, single-family home market is more resilient because buyers at higher price points are less affected by these microeconomic factors. They often have more cash or have already built significant equity, making them less sensitive to the rate fluctuations. This is why the single-family home market is still red hot, even as the condos and townhomes are struggling. So, what does all that mean for you? For the sellers, your strategy must be tailored to your property type. If you are selling a single-family home, the market is still very much a seller's market. We're still seeing multiple offer situations and a significant number of cash offers. The proven strategy of listing your home at a lower price to generate a bidding war is still a winning formula. This creates intense competition and drives prices up, often well above your initial expectations. Focus on strategic pricing and flawless presentation to attract the maximum number of buyers and get the best possible outcome. Now, if you are selling a condo or a townhome, your strategy is completely different. The days of multiple over-asking price offers are for most part on hold. Your competition has increased dramatically, and your potential buyers are extremely sensitive to pricing and the financial health of the HOA. As a seller, you need to be proactive. Get involved with your HOA to make sure your association is compliant with the inspection and repair requirements and approved by the lenders. Your goal is to be the best looking, best priced property in your immediate competitive set, and one that gives buyers confidence that they can actually get a loan. Aggressive pricing from the start, combined with impeccable home preparation, staging, and marketing, is not just a good idea. It's an absolute necessity. For the buyers, This is a golden opportunity, but it requires a nuanced approach. If you are in the market for a single-family home, you now have a little more time to make a decision. The market isn't moving at the insane pace it was moving last year, but you still need to be prepared. Work with a knowledgeable agent who can help you identify a quality home and navigate the negotiation process. For those looking at condos and townhomes, you have the most leverage you've had in years. The increase in days on market and the decline in prices means you have more room to negotiate. The key is patience and discipline, and this is where you need to do your due diligence. You and your agent must meticulously vet the HOA, review the HOA reserve study, and examine the meeting minutes. This is critical. You are not just buying a unit, you are buying into the association. Don't fall into the trap of waiting for rates to drop. That perfect moment may never arrive, and if it does, it will unleash all the pent-up demand from other buyers waiting on the sidelines, wiping out your leverage. The best time to buy is when you have the least competition, and for condos and townhomes, that time is now. The bottom line for the August 2025 Silicon Valley real estate market is this. The market is not crashing, but it is splitting. There are two distinct markets operating side by side. The single-family home market remains strong and resilient, while the condo and townhome market has shifted dramatically, offering unprecedented opportunities for disciplined buyers and requiring a very different strategy for sellers. Understanding these nuances is the first step to a successful transaction. The second step is having a trusted guide. I'm here to help you navigate this complex market, whether you're looking to buy, sell, or simply want to understand your options. The best strategy is a custom one, tailored to your unique situation and the market conditions. If you'd like to schedule a consultation, text word HOME to 650-766-6100. My contact information is also in the description below. Thank you for watching. I'm looking forward to connecting with you.